Hi, everybody. Welcome to the latest Carson's Take 5 with Ryan and Sonu. Sonu's on location at Wrigley Field. We're not sure how well he can hear this or not, but how's Wrigley? What's the score of the game, Sonu? Let's start there.
Yeah, playing the Giants here, and the score is looking good so far. It's 2-0 for the Cubs, fourth inning.
Well, there we go. You never know where you're going to get a Carson's Take 5 from when we do these. So this week, we're going to talk about the Fed. And we titled this week's Take 5, We're Not Buying What the Fed is Selling. Sonu, last time we did this, we talked about the inflation data last week on the CPI coming in better than expected, consumer prices. Let's just keep that simple. Inflation's coming back pretty quickly. We can get into that if we want to, but how does that matter to the listeners and investors out there as it pertains to the Fed? And I'm going to turn it to you in a second here. The Fed came out last Wednesday, and they said, we're not buying it yet. We're not buying the inflation story yet. We need a little more data. We need a little more positive news. They came off hawkish. All that means is they were expected to do 3 cuts when you look at the Fed dot plots, and they lowered it to only 1 cut.
Right.
Now,
for
we're not buying what they're selling. We think they're probably a little more dovish behind closed doors, if you will. Why is that?
I think once bitten, twice shy. They said inflation is going to be transitory, and it wasn't. So they're like, oh, we don't want to be caught offsides again, right? But the reality is markets, and including us, I think we're part of the markets, right? We're part of it. No, we manage money. So, look at the inflation data. Shelter disinflation is continuing. New car prices are going down. Used car prices are going down. Food prices are going down. Inflation at seated restaurants, prices are not going as high as they were a couple of years ago. And all of that suggests inflation's on its way down. Market's looking at that. Wait a minute. Fed, what are you smoking here?
Exactly. And the reason, and let's think about it. So the reason the Fed hiked rates aggressively 2 years ago, we saw generational highs in inflation. So they hiked rates to slow the economy and to slow down inflation because nobody likes inflation. But now, Sonu, we're on the other side of this where the inflation data that we're looking at, I mean, maybe people see it differently than we do, but we see big time improvements taking place here and likely continuing to take place the second half of this year. I guess the question is, well, why in the world do we need interest rates up over 5%? The truth is we probably don't, right? But I think the Fed is worried, like you said. They had a lot of egg on their face when they said transitory. Right. And what does that mean? A couple of years ago, they thought inflation was up. They thought it'd come back quickly. Well, it was stubbornly high, so the Fed was quote-unquote wrong. And now they're worried if they cut a couple times, inflation will come soaring back. But that's what I want to ask you, Sonu, here. Look at time-wise. We got 2 minutes to go.
Okay.
Are you worried if the Fed, let's say they cut 2-3 times here over the next 6 months or so? Let's hypothetically say 3 times. Let's say they cut 3 times. Let's make up a number here. Are you worried inflation is going to come soaring back? Because I think the Fed is to a degree.
No, I simply because I think the supply side is coming back. You look at all the forward-looking indicators of inflation. Demand, what drives that? Wage growth, right? Wage growth is not, it's not back at pre-pandemic levels, but it's running slightly higher than that, right? But it's not red hot like it was in 2022. Look at consumer expectations of inflation. Even that's more or less what it was before the pandemic, maybe slightly higher. But it doesn't tell you inflation is going to be like 5% or 6%, let alone 9%, which is where it was in 2022. Yeah. Business expectations of inflation, even that's more or less come back down to about 2.5%. All of this tells me, or should tell all of us, that the inflation problem is over. We're just waiting for the Fed to get on with it.
Well, and again, that's not what you're going to hear on TV. And we're aware it's an election year. People are obviously heightened for a lot of reasons. Inflation, yes, prices are more expensive than they were 3 years ago, 2 years ago, 4 years ago. But again, what matters to the market is the month-over-month change and the year-over-year change. And to keep this fairly simple, those are slowing down. We've got 30 seconds or so, So what was that?
I think the Giants scored, unfortunately.
Oh, that's okay. That's some noise there. Gotcha. The bad guys scored. We don't like that. So again, with maybe a minute or so left, what else do I want to ask you here, Sonu? I mean, here we go.
Retail sales, industrial production today, retail sales.
Yep.
Look, the economy is normalizing. It's not, like you said, it's not red hot. Again, another point in favor of the fact that inflation's not surging. right? But doesn't mean the economy is slowing down. Then industrial production, you just talked about the supply side. Industrial production came way above expectations.
Yes.
High-tech production is up. Electrical equipment production, the stuff that you need for the whole AI thing to get going, that stuff is up as well. So there are a lot of good stories within that side that tells you, supply is coming back. What do you need for inflation to go down? You need supply to come in, strong. And we're seeing that. Where supply isn't coming strong with the Fed keeping rates high, and this gets to something you and I talked about. What's the biggest mistake the Fed could do? Keep rates high, and then you don't get housing supply. Housing would be a problem. It will continue to be a problem if the Fed keeps rates high because builders won't build.
Yeah, you think about it, maybe last comment on this. I mean, interest rates are high. A lot of people are kind of locked into their homes, if you will. If the Fed were to cut a little bit here in the future, that again could lower interest rates and maybe open up people to kind of move around a little bit more, so to speak, when it comes to housing. And obviously, housing was a drag on GDP. That's our economy for, what was it, like 9 or 10 quarters
in a row? 9
quarters
in a row.
A little jump here recently, but again, if the Fed keeps rates high, it might continue to be a headwind, if you will. But we think, again, the Fed likely will cut 2 times this year, in September and then again in November. And again, the main reason, inflation is coming back a lot more than people expect and than the Fed expects. But that's going to be a positive sign. So with all that, everyone, I wore my 513. I know we were at baseball theme. I live in Cincinnati, so I'm a Reds guy.
There's the stadium. There's Wrigley Field.
There's Wrigley Field there. So a little
June 9th. Shout out to our friends at New Bean for hosting me tonight, so thank you.
Ooh, that's I need to get the invite next time. That looks pretty nice. Sonu sent me a picture of the dessert cart. Where's the dessert cart? Is that close by or not really?
It's gone now, but I need to hit it. That's what I need to do after.
Ooh, it looked good. We'll leave it at that. Maybe a little inflation on the waistline after this one, but that's how it goes. Listen, everybody, thank you for listening to the latest Carson's Take 5. We have a lot of fun doing these. Thank you for listening. We'll be back next week. Take care. Thank you.